Hey, this is Matt from InvestiQuant. Today is Monday, May 17, 2021. This morning we saw the markets gap down following Friday's sizable rally, and we've kind of consolidated lower the majority of the session. We looked at that pattern this morning that favored larger moves to the downside following that pattern of the largest rally in 20 days. And we haven't seen giant moves in either direction. We have traded a little bit more towards the downside so far today, but bottom line is we're still inside the prior day's range. We don't have a huge range relative to what we've been seeing. So what we're going to look at this afternoon is we're just going to do an update on that study and see what has happened historically when you've got an inside day pattern forming on the heels of that largest rally of the past 20 days. So I've selected all four instruments. We're going to be looking at an entry time of 3 p.m. Eastern time, set up as a long that exits at the close of regular trading hours, which is 4:15 p.m. Eastern time. For the opening filters, I'm going with gap down here, and I could do gap down in prior day range, but because of the pattern I'm going to be selecting here that is implied. So the pattern that I'm going to be building out that has happened since the open of regular trading hours is an inside day pattern. So I need to say that today's intraday high is less than the prior session high, so I just need to hit the minus sign there. And then the low is not less than the prior low, so I hit the minus sign there, and that'll create an inside day pattern within the platform. Next, I'm going to go into the price patterns library, and I'm going to select that today is the day after the largest rally of the past 20 days. That's available in the active today section and the unique moves section here. It's right over here in the active today. And then I'm going to go into the indicators section, put us above a 200-day simple moving average, and now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when you gap down following the largest rally of the past 20 sessions, and this is taking place above a 200-day simple moving average. From the open until 3 p.m. Eastern time, you have an inside day forming. So an inside day on the heels of this largest rally of the past 20 sessions. Historically, there's 32 samples of the ES for this pattern dating back to 2003. The NASDAQ comes in with 22, the Dow 19, and 17 in the Russell. So pretty rare. Inside day patterns don't happen all that often, and so to get that forming on the heels of the largest rally, which isn't something that happens very often as well, that makes sense why we'd have few samples here. But looking at the win rates on them, 41% of these have closed above that 3 p.m. price for the S&P. Very similar number there in the NASDAQ, 41%. The Dow, 37%, and the Russell, kind of an outlier over there at 65%. So for whatever reason, the Russell has been a little bit stronger, but it does have the smallest sample sizes as well. The other three instruments have been a bit weak there, historically speaking. Now, if we look at the average win and average loss, they're pretty similar in size for the S&P. The NASDAQ has had larger average losses. The Dow has had larger average losses, and then the Russell, pretty similar in sizes as well. So historically speaking, it's been a little bit of a bearish lean to it going into the close, assuming this pattern is still in play. The S&P did test down around Friday's lows not too long ago. It held above them, so we do still have an inside day as of the time of this recording, but if we break much lower, then this inside day pattern would no longer be valid. But hopefully you found this helpful. Good luck today. We'll see you next time.